In the year 1602, one company made a decision that changed wealth forever. Instead of asking kings for money, instead of risking everything on dangerous voyages, they invented a brand new idea, selling pieces of their company to the public. It was the birth of the first stock market, and the moment capitalism truly began. Before the 1600s, global trade was exploding, but funding it was nearly impossible. Sending a ship from Europe to Asia took years. You needed supplies, sailors, defenses, and enough silver to trade. And here's the problem. One storm, one pirate attack, one bad market, and everything could be lost. Your entire fortune gone overnight. Investors were terrified. Merchants were limited. And major trade explorations stalled because no one wanted to risk ruin. The world desperately needed a system to share the risk and share the reward. Enter the Dutch Republic, a tiny nation with massive ambitions. They wanted to dominate Asian spice trade, but no individual merchant had the money to build an entire fleet. So, in 1602, the government approved a radical solution, the creation of the VOC, the Dutch East India Company. What made it revolutionary wasn't their ships, it was their financing. For the first time ever, a company allowed the public to buy shares, tiny pieces of ownership, in exchange for a portion of future profits. This meant thousands of people could pool their money together, so no single investor carried all the risk. For the first time in history, ordinary citizens could invest in global trade. As the VOC grew, investors wanted a place to buy and sell their shares. So Amsterdam built something the world had never seen, a public stock exchange. Here, traders shouted orders across a crowded hall. Prices rose and fell based on news, rumors, and ship arrivals. Stocks could be bought in the morning and sold by afternoon. This chaotic marketplace introduced the tools of modern investing. Brokers, early price charts, long-term investing, day trading, even futures contracts. Amsterdam didn't just create a stock market, it created an entire financial ecosystem. But once people realized they could get rich quickly, the trouble began. Speculators bought shares with borrowed money. Rumors of ship arrivals or lost cargo caused wild swings. At one point, VOC shares soared so high that even wealthy merchants warned of a crash. And eventually, it came. Share prices plummeted. Investors panicked. Fortunes evaporated overnight. This was one of the first large-scale stock market crashes, hundreds of years before Wall Street existed, and it proved a lesson still true today. Wherever money can be multiplied, it can also be lost. Despite the booms and busts, the Amsterdam Stock Exchange created the foundation of the modern financial world. It introduced the idea that anyone, not just royalty, could help build global enterprises. It allowed nations to expand, merchants to innovate, and investors to share in the rewards. Every stock market today, from London to New York to Tokyo, is descended from this single idea born in 1602, selling shares to the public. If you're enjoying these stories about how money shaped history, make sure to subscribe to the History of Money for more episodes every week. And in the next video, we're diving into one of the strangest financial scandals ever recorded. A French economic experiment so wild, it nearly collapsed an entire nation and helped create modern central banking. You won't want to miss it.